Guys, natumaini wazima wa afya. Okay, today we are going to proceed with our second topic from the first topic that has been we have been discussed on the last time. So today we are going to look on the second topic, that is trading pairs. Okay, I think on the first topic we had discussed a lot about what is forex, how to trade forex, what are the participants on the trading forex. So today we are going to discuss about trading pairs. So when we are talking about trading pairs, means just like commodities that we are going to trade. So due to their fluctuation change in their price, as we are retail traders, we are going to be profitable. So today we are going to look about trading pairs. So after this topic of trading pairs, I think everyone is going to be familiar with understanding general concept of trading pairs, identifying the base and the quote currency, and choosing a suitable pair for trading. Okay, general purpose for this lecture is to enhance the understanding, clear understanding, and the clear knowledge about how to choose the trading pairs, about how beginners they can choose the trading pairs. Okay, first things to understand is what is trading pairs. When we are talking about trading pairs, trading pair is the quotation of one currency against another. For example, we have Euro USD. So Euro versus USD is a trading pair. So here it's just like in our normal environment, when we are just going to the market to buy something, we are going to buy the commodities with our money in our hands. So we have Euro USD. Euro, it can act like a money. USD is just like your commodity that you are going to buy. Sometimes USD, it can act like a money, and the euro, it can act as a commodity. So one country can have USD and another country can have euro. So as we discussed about what is forex trading, we said that forex trading is just a foreign exchange market. So due to the interchanging and due to the fluctuation of the price, one trader is going to be profitable. So this means euro is compared with USD dollars. Yeah, that's all. We can ask ourselves in our mindsets, why are currencies traded in pairs? So as I said before, in order for the process of marketing, or in order for the process of trading to occur completely, we must have two things, whereby one is commodity and another is just like a money. So you have a money, then you are going to the market to buy a commodity. I think I'm understandable. Okay, because currencies are always have relative value. That's like commodity and the money in the market. For example, euro versus USD. So the price only has meaning when compared with another currency. There is no such things as buying on euro in forex. You buy one currency while selling another currency. That is very interesting issues about the trading forex. So this is interesting issue. So you buy something, then you sell something at the same time. So they act antagonistic. Okay. So now let us come on the second slides, or on the another slides, about the anatomy of the trading pair. So what is the anatomy? One can ask himself or herself about general anatomy of the trading pair. A general anatomy of the trading pair having two parts, which we have the first part, which is a base currency, and another part is quote currency. So when we are talking about base currency, means the currency being bought or sold. This is the first currency. So for example, as I said before, let's consider we have XAUSD. Let's say we have SAU USD, XAUUSD, XAU USD. So from this point, we have two parts of the currency, whereby the first part is called the base currency and the second part is called the a quote currency. So base currency is always one to being bought or sold. For example, somebody can say that buy gold now. So that's all. When we are talking about quote currencies are used to measure the value of the base currency. This is the second currency. So the second currency, this one, for example, in this pair XAUSD, the second pair is what we call quote currency. Therefore, when trading forex, we buy one currency and selling another at the same time. So this makes trader to earn profit from trading. Again, we come to the next part, which is talking about buying and selling. Let's consider Euro USD. Buy Euro USD. You believe Euro will become stronger than USD, and selling Euro USD means that you believe USD will become stronger than Euro. Simple rule are buying strengths, selling weakness. So that's all. Now we can come to look about the different types of trading pairs, different types of the trading pairs. So there are three main types of trading pairs. The first is a major pair, second is minor pair, and the third one is exotic pairs. So we are starting with the first one, which is a major pair. So major pair, these are always contain US dollars. So when you are looking at on your charts, let's say MT5 or TradingView, and you find some pairs contain USD, this means that pair is a major pair. Examples of the major pair, we have this one, SAU USD, which is gold. We have Euro USD, GBP USD, and so many. Now let's come on the characteristics of these major pairs. First of all, highest trading volume. Major pair, they have very high trading volume. Means the amount per pips is very high. We have small spreads. Also they have small speeds. Again, we have high liquidity. When we are talking about liquidity, as we discussed on our last lecture, liquidity is just refer to the how fast the investment is converted into the money or is converted in the income. Yeah. Now let's jump to the minor pair, which is a second type of trading pairs. These do not contain US dollar. Example, we have Euro GBP, Euro JPY, GBP JPY, CHF JPY, and so many. Now we come on the characteristics of the minor pair. Minor pair, first characteristic is moderate liquidity, slightly larger spreads. So that is all characteristics about the minor pair, and these pairs are recommended for the beginner to trade them. Okay. Now we come to the exotic pairs. Exotic pairs, one major currency pair with an emerging market currency. So we say that these exotic pairs are the pairs that emerge on the markets. So the new pairs, for example, USD TRY, USD ZAR, Euro TRY, so many. Now come to the characteristics of exotic pair. First one is high spread, low liquidity, high volatility, and higher risk. They are very high. They have a very high risk. Now come to the factor affecting trading pairs. What are the factors? One can ask himself or herself, what are the general factors that affect the trading pairs? We have so many factors that can affect trading pairs. Currency price move because of interest rates, inflation, employment report, GDP, political events, wars, natural disaster, central banks. So general news in our real environment can affect these trading pairs. For example, the fluctuation on the market's oil can affect general trading pairs. Now we can come to the common mistakes made by beginner. These are the general common mistakes. These are common mistakes that most of the beginners do without their understanding. First one is trading too many pairs. As you are a beginner, you have to select your best pairs for trading. And the second one is ignoring news. We can say that when you are trading technical analysis, you have to base with technical analysis. You are not required to trade fundamental analysis. And another one, not understanding the pair. Some people, they choose a pair where they don't understand it. They don't have clear knowledge and the understanding of it. Also, we have trading exotic pair too early. They come to trade exotic pair too early, and some of them, they don't have proper risk management. So as I told you before, in my videos here YouTube, make sure you like, you comment, share, and subscribe. I'm going to teach you very well about what is forex, then we come into trading pairs, then we come with the risk management, analysis, so many. So make sure you subscribe, you share with your friends in order to have this knowledge. Now we come to the key takeaways. Key takeaways are forex currencies are always traded in pairs. The first currency is the base currency. The second currency is the quote currency. Buy when you expect the base currency to be strong, and sell when you expect the base currency to be weak. Beginner should focus with a major pair. Okay, now guys, for the more information, you can contact me via my WhatsApp number. And for those who want to join my community, for those who want to have my mentorship class, they can contact me via this number. Okay, thank you for listening, and see you next time. What to do is make sure you subscribe, you share, you comment, and make sure you DM me for the any circumstance. Okay, thank you, and see you